Hey traders, this is Revan Wood. I go by SageFT in the live trading desk at marketflowtrader.com. I hope everybody's having a wonderful weekend. This is your Sunday night review and rev up. Before we dive into the charts, let's take a look at performance and performance expectations. Now, what I mean by performance is, let's say that a trader made 1% a day every single day. That trader would be the best trader on the planet, absolutely hands down. So let's relate that to the real world. Let's just talk about realistic expectations of profit. When we're beginning the testing and finding the information process, yes, we want to test the limits of what can be made, what can be lost. We want to find our boundaries. As remember when we were kids, we were pushing the envelope. Okay, that's great. But people that think risk first find the boundary where going for a home run every single day, they realize it doesn't work exactly that way. So what we want to do is we talk about realistic expectations of what you can make from an account size. All right, so let's think about if you had a $50,000 account. If you made 1% on a $50,000 account, you would be the best trader ever to exist, because instantly you would be parabolic because the gains would increase all the time. Where people fall short is they're trying to make 500 a day when they've never made 50 a day. Let's say that your max drawdown is $1,000 a day. Okay, if you made $50 off of $1,000 allowable drawdown, you've made 5% on a day. You've made 5% on a day, so you're the best trader to ever exist that day. Oh yeah, but I see guys doing this and that and this and that and this and that. Are they really doing that? And do they do that every single day? Trading is to produce income. So what I want you to think about is, instead of swinging for the fences and trying to make that $200, $300 a day on a $50,000 account, I want you to either reevaluate whether a $50,000 account is the right size for you, if we're talking about prop firms, okay? Or you want to think about, hey, maybe I need to have a realistic expectation. I mean, because shoot, I can make $50. I can make 1 point per day. Because here's why I'm saying this. If you can make 1 point on one contract, okay, in 30 days of doing that, you can make 1 point on 2 contracts. Okay, and then 30 days of doing that, you can make 1 point on 3 contracts. Okay, and then 30 days from that, and you guys see where we're going with this, right? So I want you to keep that in mind as we come into next week. We're going to keep that in focus in the room, and we're going to remind people that this is for income, and you have to figure out first if people want the widget that you're selling at the price you're able to sell it at. So think about that. Now, let's go ahead and get into the charts. Let's talk about last week's charts, because man, we had some action. Oh my goodness. Let's start with the daily chart. Let's start with what it looked like in the beginning of the week. Nice move up. We hit the top around, it was 30s over. They actually did it overnight. That's how they roll. And then we have nothing but selling ever since. Now, we hit a couple levels that we were watching, the 20 SMA, and then this high to high here. But let's put it into perspective, shall we? Please. Nothing but up, nothing but up. Very, very hard rally going on here. If we look at position, we're still in the upwards position, right? So what we have is upward sloping candles above the upward sloping 20 SMA, which is above the upward sloping 200 SMA, and everything is basically parallel to each other. Bullish. So the question this past week was, were we going to dip below here and close? And if we dipped below this white line and the 20 simple, what were we going to do if it closed? Okay, so now they've answered the question. The first thing that we looked at is they rallied this thing very, very nicely right off of the bottom here. 5,200, slightly below it. I've got the Fibonacci's here. 50% is 5,250 exactly from this precipitous drop on Thursday. Now, what do we do from here? Well, we don't know. What we know is we closed right at the 20 simple on the daily chart, right at the 50% level on this move here. Let's go to the 4-hour chart. This gives us a little bit more information. We also closed basically right at the 4-hour down sloping 200. So the next couple bars are going to be very, very critical. Do they launch us upwards and resume the position of power on the 4-hour chart? 20 simple, hook back up. If we look at position here, okay, we're in chop. Okay, we're not in the position of power yet. The reason that we're not in the position of power yet, now I can remove this so we can see it. Well, we kind of are. Now here's the deal. If this next bar Sunday night opens red, it will probably make the 4-hour 20 simple flat. If it keeps it green and it just kind of floats it here, you're going to see the 20 SMA on the 4-hour kind of float upwards. That's going to keep us in the position of power. So we have the high to high trend line that we're watching here for early next week. Do we get to it? If we get to it, do we go through it? If we go through it, do we come back and test it and push? If we don't get to it. What do we do? Do we fail and come back down to here? Do we fail and come back down to here? Do we test the 200 simple for the first time in a very long time on the 4-hour chart? It would be very healthy for it to test. Most traders say, oh, that's a 100-point drop. That's huge. No, it's not. I want you to think about this relative to the price. A 100-point drop at 5,000 is nothing compared to a 100-point drop at 9,000 or at 900. There's no comparison. So until we get heightened volume that is above, let's say 4, 5, 6 million contracts, 99% downside price action volume, that's when we would be looking for this market to fall apart. Let's go back. Let's take a look at the 15-minute. All right. Ever since this drop here, what we've had is nothing but just steady trapping the shorts, making the stops get hit, making the stops get hit. So next week, and that's looking at last week, basically just the whole thing again and again and again. We're back in the trap zone. And so what we're looking at next week is, does the 20 on the 15-minute stay above the 200 and stay in a position of power, meaning the candles fan above the 20, which fans above the 200, which turns up. All right, so with that being said, next week, let's take a look at the news. I do believe there's just a little bit. Forex Factory, what did I do with that? Here it is. Okay, Monday, Monday, there's nothing. Tuesday, there's nothing. Okay, now, here's where we got the keen eye and we're paying attention. The obvious ones are the core CPI. Wednesday, 0830 hours, mandatory. That is going to move the market. Don't know how much, whatever, it doesn't matter. Now, there's something that we want to see here. Look, Wednesday at 1:01 p.m., 10-year bond auction. Okay, 2 p.m. is the FOMC minutes. Okay, Thursday is the core PPI, unemployment claims. Okay, and then let's see. This is the other one that I was looking at. 1:01 p.m. on Thursday is the 30-year bond auction. That's kind of important right now. So we do have a lot of news starting to come in Wednesday. Okay, Monday and Tuesday. We can float and it can deal with its hangover that we've had every Monday and Tuesday for the past 6, 7, 8 weeks of the price movement from the late week before. Okay, with that being said, everybody, that is the review and rev up for this Sunday, April 7th, 2024. That's going to do it for me. I hope everybody has a wonderful evening. I'll see you tomorrow morning in the room. Thanks.